Hey guys, this video is going to be useful to anyone that's day trading stocks, options. If you're trying to follow financial markets, it's for short-term traders mainly, but some conclusions could be derived if you're a long-term trader as well. So the question of the day is, what is wrong with this picture? I'm going to show you this picture. This is actually a snapshot of a partial watch list of mine, and I want you to take a look at it. And I hope you are seeing everything the way I am seeing, which everything is green. So why would I say what's wrong with this picture if everything is green? Okay, let's take another look. Before I move to the next slide, please try to answer that question before I actually give you the answer. So look, I mean, how crazy is this? Even Bitcoin is up today, right? So Bitcoin up 122 to 6,700. Dow Jones is up 262 points positive. S&P 21 points positive, NASDAQ 67 positive, VIX positive. Okay, like everything is positive, right? So what is wrong with this picture? And so not only the technology stocks are positive here, I got a pharmaceutical stock that's up 15 bucks for the day. I mean, it's what is wrong with this picture? Okay, hopefully I've given you enough time to come up with an answer on your own. I'll actually, before I reveal the answer, I'll give you another hint. Okay, so let me give you a quick hint here. Take a look at this chart. As you can see, S&P 500 recently just continually moves higher and higher, 28.46 all the way to 28.99. Of course, this morning it's actually above the 2900. Congratulations, Mr. Market. This is what we've got. Now, typically, okay, when the market goes higher, what is supposed to happen to the VIX, guys? Well, the VIX is supposed to drop, right? So for those of you that don't know what VIX is, it measures the volatility. Pretty much, just let's call it, for the purpose of this video, the fear index, okay? And so it has the exact opposite relationship with what the market is doing. So in other words, just remember this. If the market goes higher, VIX is supposed to be going lower. But is it? Let's take another look at this picture I was showing you earlier. What we've got here is a rare case of divergence developing. Again, take a look right here. As everything is going higher, Dow Jones, S&P, NASDAQ, isn't the VIX supposed to be going lower? Well, no. The VIX is actually going higher. And this is a case of a divergence. In some of my videos, I talk about how do I identify some of the moves that stocks or markets make before the move actually takes place. And now, even though that this by itself may not be just enough of an observation to just go and just short automatically everything within your site, but if we combine it with some of the other observations, and for example, if this divergence persists, not just the morning which this photograph was taken on the morning of August 27th, if this divergence actually persists beyond the morning hours, if we observe some correlations with this divergence developing later in the day and possibly the following day, then we may have something here. But this is definitely a case of divergence because this does not happen very often. Or if it does, it may be just happening for just a couple of seconds throughout the day at some point. And then the correlation reserves to be normal, where the VIX spikes when the market goes lower, and the VIX goes lower when the market goes higher. So clearly, this is not what we're seeing on this picture right here. VIX is supposed to be dropping, not going higher. But it's exactly mirroring what the rest of the indices are doing, as you can see on this miniature charts. Okay, so moving forward, divergence between S&P and VIX in a chart to help you illustrate this a little bit better, right? So on Friday, before this opened on August 27th, the market VIX was in the range of 11.65 to about 12.5. It closed much lower, but all of a sudden the markets are opening much higher on August 27th, and the VIX is also moving higher. The VIX is supposed to be going lower. What is it doing going higher? That's the most important question to ask right here. Okay, let's take a further look, looking into today, which is August the 28th. Hold on a second. This divergence is actually staying. It is actually still here. The market is moving higher, reaching an all-time high at the time I was taking this photograph right here, 2906. What is the VIX doing? At the same time, it's gapping up higher and it's moving higher. And at the time I'm recording this, I believe the VIX is actually all the way at the 12.3, 12.4, which means as the market tries to reach its all-time high, the fear index is actually increases, which could signal a reversal in the markets in the near term. So here's a better illustration. On this chart, you will see an illustration where I overlay S&P 500 and the VIX. So this is what's happening, right? The market gaps up higher. The purple line is S&P 500, and clearly this is the VIX. So as the market gaps up higher, so as the VIX. The VIX should be going exactly the opposite direction, but that's not what's taking place here. Let's take a look at another picture here. VIX divergence intraday on August 27. Take a look at this. It's not just that it was a one-time occurrence, or again, whether it's maybe within a second or a few seconds or even a few minutes, but look how consistent this divergence has actually been. So on Monday the 27th, the market gaps up higher, so as the VIX, it goes higher. It should be going lower. Then the market pulls back a little bit, but the VIX pulls back, but then it goes higher again. Okay, look right here on this later in the day, the market actually moves even higher. The VIX moves higher. The market moves higher. The VIX moves higher. Again, the market moves higher. The VIX moves higher. Only towards the very, very end do we see that the market, this last part of the move of the market, the VIX, the market moves higher and the VIX actually drops. So this is what it's typically supposed to be doing. But throughout the day, this correlation multiple times was confirmed, which is a very interesting factor. Now, what we're seeing is today, on August 28th, what I believe is forming is a bullish reversal black candle on the VIX. Let's take a look right here. Actually, about 10, 11 days ago, I posted a video pointing out to this bottom in the VIX. And since then, the VIX from 10.5 rallied all the way to 17, as you can see on this chart. And since then, it's given up most of the gains. And right now, as you can see in the morning, this was taken before the VIX actually spiked higher to 12.4, 12.5. See this black candle right here. A lot of times, not 100% of the times, but this will actually indicate, and not to confuse with some of the bearish black candles on this chart as well, but a lot of times this type of the candle formation will indicate, it's actually a third consecutive candle with the tail sticking out right here. See, last time we had a similar candle. It wasn't black, it was, a white candle here, but that's when the bottom was established. And so clearly we have a huge support level on the VIX right here around 12. It looks like it's not giving in. It's not dropping like it tried to drop below the 12 a couple of times, but it's still hanging in there. So it makes me think this right here, this bullish black candle reversal could be the sign that the VIX will spike from here. So hold that thought in your mind. Let's move a little bit forward here. What are some other observations that I'm seeing that at the end of the video, hopefully we're going to put a plan of action that you could execute and profit from? Okay, well, what I'm observing is there are many good stocks on great news or great earnings are failing to break out of bullish patterns. And bullish patterns could be like a cup with a handle, for example. So I'm randomly going to show you maybe 9, 10 examples. They're from different sectors. So to avoid the confusion, maybe you've picked just one sector that acts similarly, as I often talk about some of my observations in some videos. But no, these stocks, they're not related. Well, maybe a couple would be from the same sector, but they're from different sectors. You'll see that as I'm showing you these examples. So here's what we got, okay? Let's take a look at example number 1, Urban Outfitters. So here's your nice cup with a handle pattern right here. It tries to move higher, which appears to be a really good earnings report, right? And then the banks are using it as an opportunity. The banks, meaning the institutional investors, using the opportunity to sell the stock off, and it reverses. And so it had a great chance to break out on great news, but it failed to do so, and now the stock is trading at 44 bucks. Next example, INTU stock failed to break out as well. In this case, what we're observing is actually a triple top, right? Again, good news, great report. Yeah, the CFO was leaving the company and so on, but still the report was great, and the CFO really didn't have a whole lot of influence shouldn't have any significant negative impact on the company, but nonetheless, it failed to break out here. It failed to break out here. Right now, on what mostly was great news, the stock failed to break out, and typically within a reasonable amount of time, we will see the stock should be dropping under the 200 level and possibly going all the way to this orange support line of 181. Now, when I say that, I mean I'm talking about possibly in the making 60 to 90 days. Okay, I'm not expecting that to happen tomorrow, just to be clear. Had a chance to break out on mostly positive news, failed to do so. And look at this, the stock trades at all-time highs. Near. Okay, next example. BBY failed to break out. The stock of Best Buy also trading at all-time high. Nice, really bullish formation here. It's finally breaking out. It's going higher. Not so fast. Best Buy trading at 74 bucks at the time the picture was taken earlier today. Look, sold off on huge volume. So again, could have broken out higher, but failed to do so. Again, when the stock is trading at pretty much all-time highs. Next example. Tiffany failed breakout, and again, looks to me like a triple top formation. Top 1, top 2, top 3. Bearish candle formation right here. At the time of the recording, the stock was actually trading right here at 130. So indeed, it was an entire reversal from 137 all the way to the 130. Plenty of other signs which spell the fact that the stock could be even moving much lower from here. Bottom line, trading close to all-time highs. Great news, great earnings report, fails to break out higher. Next example, CMG, everyone's favorite, right? Fails to break out higher, creates not a triple top, but this time we're looking a bearish formation that I referred to as double top, right? And so it breaks lower with a magnificent opportunity to actually drop all the way to 373, possibly in the next 3 to 6 months. So really nice opportunity right here on CMG. Again, the stock trades not at all-time highs because years ago the stock was trading at the levels of 840, 850. They had a bunch of negative news. The stock dropped all the way to 250. So right now, this double top is referring to the all-time high for the last year, whether the stock has been trading, right? Next example, Sam's Beer. Pretty easy. Double top right here. The company's failing to break out from here, at least for now, although we do have some bullish signs here, but I don't think the stock is going to move significantly higher from here, so any chance at 320 would be a great short opportunity. Actually, we did send it out as one of the alerts yesterday. So double top fails to break out when the momentum is clearly there on the collaboration between the beer companies and the cannabis stock companies. Okay, next example. ANET failed breakout. Look, and it's still trading at all-time highs, but it could have moved significantly higher yesterday. It could have moved significantly higher today, but it failed to do so. Now, this has been a really good platform, this foundation, okay, this consolidation. So typically you would see a stock, this is actually a very platform for the stock to take off from, call it a nice runway before an airplane takes off. And so it did attempt to do so, but it failed. And where did it fail? At the all-time highs yet again. So it seems like the story repeats itself regardless of what sector the stock say. And look, importantly too, to notice on huge volume, did it actually sells off at these high, all-time high levels. Okay, next example, Walmart failed breakout. So it had a chance on what appeared to be the best quarter ever for Walmart, really promising. It could have easily taken this level of 100, 105, but it stalled out at 100, reversed, and currently trading the 95, 96 level with the potential to fall lower from there, or maybe just at least trade sideways. PLCE, Children's Place, okay, nice triple top again. And actually the report was extremely bullish, really strong sales growth, revenue growth, bit on the earnings estimates, great forward-looking projections, and so on, and yet the company fails to break out on such great news. So again, we got top 1, top 2, top 3. Very bearish candle formation here. From here, we're also seeing that the stock is selling off on huge volume, which communicates to me that the banks are definitely taking profits, selling into the strength of the positive earnings report. So another failure to break out on great news. So the ultimate question here is this. If some of these great stocks that are trading at their all-time highs are having a hard time breaking out of some of the really good bullish patterns, as we've seen on a lot of these charts, how on earth is the market going to move higher? Okay, so let's take a look at some of the other things here that I'm observing. Some of the best stocks are very hesitant to go higher and are showing signs of constant profit taking at these high levels. Give us some examples. Come on, let's see what we got here. Well, before we get into some charts again, increased activity in put options in top stocks. Surprise, surprise, increased activity in Apple put options. Who would think that a ton of people would be pulling the trigger on Apple put options right around the same time? Coincidence or something to pay attention to? Profit taken in Netflix. Well, that shouldn't be a surprise, right? After the stock gapped down after the earnings report, as was predicted in this channel, this $50 drop. It actually tries to rally, fails. Black candle, we recommended a nice short opportunity. It drops to a 310 level. Time to collect some profits. Reverses around $60, $70, almost higher. Another black bearish candle formation, which tells me that the banks, yet again, the institutional investors are taking profits right here. Now, you wouldn't be thinking by looking, because overall the stock is still in the green. Yesterday, making a big move, like plus $14 at some point in the day, and then at that level, which coincidentally lines up with this 50-day moving average line. So it looks to me like the stock is having a hard time breaking above that, and as long as it stays underneath this 50-day moving average line, then there's a high probability the stock will reverse, and this profit taking in some of the best names is going to continue. So bearish formation. What's interesting to notice is as this stock price literally made this huge move higher within days, right? So from 310 all the way to 374, 375. As the stock price runs higher, the accumulation does not follow it. So typically, you would want to see in a healthy environment where the stock is really positioned to move higher, you would want the accumulation to pick up. And it's not happening. So at these high levels, not many investors are really interested in buying the stock. And last but not least, institutional investors are cautious pre-market. This morning, I observed this interesting thing that people are getting scared buying Amazon. And if they're getting scared buying the best stock in the market, or what is perceived to be the at least top 5 stocks in the stock market right now, right? They're being extremely cautious. And so right before the market noticed, people were coming in and they're taking profits on these levels around 1930, 1937s off the Amazon. Last Friday, it's not on here, but literally 2 trading days ago, I was noticing the same thing, that as Amazon was moving higher, and I've got an illustration of this right here. This was actually from earlier today. Take a look at this. So this is the observation, right? As the stock drops, here's the market opens at 9:30. Look, the huge bar lower, followed by consecutive 2 red bars lower. So as soon as the stock opens, they were selling it. Let's observe where's the volume. Well, that was the highest volume so far for the day. This is the second highest bar on the volume. Let's move higher and see what was happening. Well, that is again was coinciding with the red bar, meaning that they were actually selling. So they're selling on higher volume, and then when the stock tries to crawl its way higher, right? It's at least trending sideways to try to go higher. Where's the volume here? Well, the volume is almost nothing, okay, so far for the rest of the day. So the stock is being distributed, sold on much higher volume than the volume on which it tries to go higher. So there's a lot more sellers here rather than buyers. Combining all that information together, I was also mentioning that I was observing dissimilar behavior in Amazon stock in the last 72 hours. Actually, in the last 3-4 trading days, every time it moves higher, I see a lot more sell volume in relation to the buy volume. And even though it appears like the stock moves higher, trust me, when the reversal takes place, it will take literally minutes for this thing to drop 50 bucks, 70 bucks. So all I'm saying is be ready, because opportunities like that don't come very often. Here's why. It appears to everyone that the market just wants to go higher and higher. Now, I'm noticing some clear signs that the probability of that is not the same as it was maybe in December 2017. So this creates a great opportunity to buy put options really inexpensively. And once the market turns around, those put options, they increase in value significantly. So let's take a look at some key takeaways. So here's what we've got. We got a rare divergence between VIX and the markets, which indicates the reversal is in the making. Number two, many stocks are forming double top and triple top bearish formations instead of breaking out higher on strong positive catalysts like exceptional earnings reports. Number three, clear signs that institutional investors are selling into the strength even in some of the best top-notch stocks. Four, as most investors think it's December 2017 or January 2018 and things will only get better, too many things are pointing to the opposite direction in my view. Now, here's the million-dollar question. What's next? Well, S&P and NASDAQ charts, in my view, will soon draw a failure to break out on their charts as a reflection of multiple individual stocks failing to break out higher. So, in other words, here's what I expect. I expect the market to do this next. This is where we are now. This is what I expect the market to do next, and at least a short-term pullback to 28.05. If you'd like to learn more how to use divergences, whether you're a swing trader, day trader, whether you're a long-term trader, 90% of my decision-making comes from the charts, as you can see. But it's being able to identify and see things before they actually takes place is what's going to help you catch some of your most profitable trades ever. So if you want to learn more about charts, if you want to learn more about how to identify divergences that could point out to the next move in individual stocks or the markets, definitely click some of the links below, take advantage. If you have any questions at all, simply schedule a 20-minute free consultation. You can ask any questions about trading stocks, trading options, divergences, bring some of the ticker symbols that you trade if you want a second opinion on them. Take advantage of this. Now, some of these 20-minute spots, they fill out pretty quick. Take action now. Get all your questions answered so you can make this year your most profitable year ever. I'll catch you in the next video.